What's up, everyone? Welcome to Money Market Truth. My name is Mark. This is Mo. This is the other Mark. I'm pissed off because of Facebook. No, I'm kidding. What's going on, everyone? Welcome to Money Market Truth. How are you guys doing? Hopefully, you guys had a wonderful day. We have a special guest, of course. We got the other Mark. We're gonna refer to him as M Square. Okay,
Yep.
right, Mo? So
Yeah.
because it's gonna be too confusing when you're like, hey, Mark, what about this Mark? What about this Mark? So he's M Square too. I'm just Mark, and then of course this is Mo. So
all
how's
M's,
everyone doing
eh?
today?
3 M's.
3 M's working today.
Yes, three M's, three M's.
Oh, wow.
Yeah, so I'm just gonna let a few people just kind of trickle in here at first. How are you? How's you guys' day going so far?
It's going pretty well. It's interesting seeing exactly what's going on here in the markets that I know that we're going to discuss about. But you know,
Yes.
at least we all still have our teeth.
Yes. Unfortunately, I still have mine right now because I would definitely want to knock them out for holding Square, not Square. Sorry, Facebook. See, I got post traumatic stress with Square and Facebook, so it's gotten to that level now. So not only am I dealing with war stuff, I'm dealing with stock stuff. But yeah, so just gotta give you guys a background real quick. Most of you already know I invested in Facebook back when it was $300 when I thought that was a great evaluation for the company. I thought it was discounted. I bought at 300, 280, went to 340. Then I had that earnings where the notorious earnings where they basically explained how much money they were investing into the metaverse. And I was actually trying to sell out of all my positions, but it just kept dropping in $20 increments. And therefore, I was stuck with the stock at 260. And I was like, yeah, people will probably buy it back up. And it never happened. So
Well, Mark,
today, go ahead.
question for you. In your thesis, did you have a stop loss or was it just, I'm going to buy for long term?
Well, the stop losses don't really work after hours. So
No, in general. Like, do you have one?
oh yeah. I had a stop loss, which was where my average was at that time, which was $300 or 280. It was one of those two. I definitely had it sitting there. It's just after hours, it would just blow through it, so it didn't really matter. So I was just I canceled my stop loss and I was trying to put in an order, like an after hours order, and it just every time I clicked enter, this price would just drop another $20. So I was just kind of stuck with it. And at that point, I was like, I didn't want to lose $40 a share. And I was like, tomorrow people will probably buy back up, and it just, just got worse and worse and worse. And here we are at the hundreds. And then I did the my supply and demand levels for Facebook, and I had 123 at the lowest demand. After it dropped, below $200, it did get there. It's been hovering around 130, basically between 120s and 150s for like months now. And of course, today's earnings happened, and yeah, it was really really ugly. So let's talk about it. All right, who wants to go first? Should I go first, or do you guys want to go first? I feel like I already talked enough.
Well, do you want to talk about Meta? Do you want to talk about the earnings, or should we? Because let's talk about it.
I guess I think both. To be honest, I mean the earnings were absolutely terrible, right? There's no denying it. All right. See. All right. M Square is already disagreeing with me. I don't like it. So.
Okay. So let me for the folks out there that probably haven't paid attention to their earnings yet, or they didn't know, let's give them a breakdown of what took place. So I guess Mo, you put it up on the screen. So what is that? 27. Let's say just close to 27.5 billion in revenue for the quarter. And, of course, the family of apps takes a whole kit and caboodle lion's share of that revenue. Then, of course, the cost of revenue, which is, now that's something that like I didn't really pay attention to at first until like really kind of looking at over the trend. That would be something for us to look at to see how it cross references of cost of revenue from Q3 to Q2, from Q2 to Q3. But then, of course, you got gross profit at 22, operating profit at 5.7, and net profit at almost 4.5 billion. I mean, for what they're going through and also what's happening within the advertisement space, especially given that a lot of things, really have been rebalanced. And then, of course, you have now it's like you have a major competitor. It's kind of like WWE versus WCW back in the days of the Monday Night Wars. I feel like that's probably what we're kind of like starting to see right now. But again, that's like, I think it was a solid quarter. I mean, outside, I think the only, and I mentioned this early on, it's like, I think that if they hadn't discussed the fact of keeping the head count for what it is and not making any adjustments in 2023, the after hours activity of what we'll see within the stock is going to be probably completely different.
So what about you, Mo? Did you end up trading this at all?
So I'll give you the option side of it. So I was looking at options for Meta and Apple both puts. Meta was at 130 and 125 puts for today were $6, so $600. Apple has earnings tomorrow, so you're getting an extra day of holding Apple puts, and it was at 140, 159, 145 puts were $2. So you get an extra day and closer. The MMs had the Meta priced in very expensive. So I think going in, it was already priced in. Initially, I thought the only person that's going to win here is the market maker because they're already priced so much that IV's high, but I was wrong. And I think the missing piece is what Mark's talking about. It's the hiring, them keeping the employees. Mark, if you want to talk about it, I agree with you. My background's HR, and I know how much it costs for training, benefits, and all that. It's crazy. So as an investor, I'd be like, let's sell it because keeping that, and you're planning it for the entire year and a half or year and 3 months. That's a lot.
Yeah. So I guess to give people a quick breakdown as it pertains to headcount. So people were expecting that there was going to be a 20%, there was going to be some type of 20% activity on their headcount, where like a lot of folks had assumed that there was going to be some type of cut towards Facebook's workforce, whether it was 5, 10, or 20%, to essentially address the operating expense, operating cost. And they came through in their earnings to say that we're going to just leave it flat as it is. So which means that we're not going to let go. We're not going to let go and cut. We're just going to keep things as they are. So which pretty much means that if you're already there at Meta, then you're going to stay there. And then if you're trying to get into Meta, then they're probably going to be facing some form of significant hiring freeze. And I think that if anything, if there's anybody gets cut from any of the companies, then the first people to go first are the contractors at the companies versus your full-time employees. So, and I think that take that alongside with the spending of what they've been spending in the metaverse, and then that open letter from one of their long-term shareholders, I think that right there, you combine those three, and that's just a recipe for
disaster moving forward.
It's just a disaster quarter. But outside of that, the revenue was still solid, given in the sense that they were able to stick it through for, especially in a market and where that we see the advertisement has significantly taken hits. I think that the biggest thing I would be watching is the travel industry, because if travel really starts to come back, that's a major part of Facebook's revenue that literally went out the door during the pandemic, that I think that they're still reeling from. And then, of course, everybody says the Apple situation, but I don't think that that's that heavy, especially given the data that Facebook already has on its user base.
But they also said, I mean, I was listening to some of the earnings call on the way home from work. They were saying that there has been a slowdown in ad revenue, right? And it looks like the growth on that aspect is starting to slow down. So my biggest issue is, again, so I have Facebook is the second biggest holding on my individual stock portfolio. And now I'm here at the crossroads, right? Because I believe in it, right? Everyone keeps asking me, like, are you going to sell it? Square, I don't believe in. That's just a trash company, in my personal opinion. I just got stuck with the shares at this point. I just going to hold, right? I have never taken a significant L in stocks because I never really sold out of any of my positions at a major loss.
Right.
Now I'm at this crossroads with Facebook because the last earnings, what happened? I was like, okay, that makes sense. They're investing a lot of money into the metaverse. I do see a future in the metaverse, but now looking at the amount of money that's still coming in, they're obviously still making money, but they're also spending a shit ton of money on this metaverse. And I feel like it's two separate companies now within Facebook. There's the social media aspect, and then there's a metaverse, and they're really trying to lean more towards the metaverse because they see the slowing of growth in the social media aspect of things. My issue is this, though. Now I feel like Mark and the company itself is kind of treating Facebook as like a startup and like a growth stock. And I'm getting a little nervous because now, like, do I sell out of my positions or do I just hold the bag? Because it's going to go lower. I would not be surprised that tomorrow it's at $100 for sure, right? But can I sit here and say,
it depends upon how London market or how European market.
So there's no denying it. Like when people ask me, do you believe that Facebook will be one of the leaders in the metaverse? Absolutely, I do. But do I want to be stuck in a company who's going to continue to burn money until they become profitable? Because I love the Oculus. They're working with the military. They have they have very amazing, innovative ideas that's going to be coming forward here in the next couple of years. But in the meantime, do I want to continue dollar cost average on Facebook, or do I just cut my losses and maybe just re-enter when things are changing, when the thesis changes and they become more profitable, because they're spending so much money right now, and
Can I
it's
ask you a
just
question?
rough. Go ahead.
Like, because let's dissect that real quick, because it's like, okay, so how long have you been holding Facebook for?
Okay, so I bought at 300. So that was what, like beginning of last year or something. So again, I just started investing like 2 years ago.
So like, so let's put things on the table. Like, this is how I examine, like, especially as an investor, if I'm holding on to a stock for X amount of time. And Mo, feel free to, like, fill in any blanks or correct me if I'm wrong also. So if I buy a stock and it's like, especially a growth stock, because we already understand exactly how tech companies move. And of course, before they become, or even if they are titans, the harder they are, or the bigger they are, the harder they fall. And then at the same token, sometimes the reward on the other side is, you hope that, the reward will be even greater on the other side of the rainbow. You've been holding the stock for about a year. So the worst comes to worst. You could literally just say, okay, hey, I take the capital loss, given in the sense that you've been holding this position for X amount of time. Now, the question is like, okay, you just mentioned a bunch of items in which that we know that are going to transpire. It may not be in the time frame of what it is right now. And I think that that's where we're playing into the part of sentiment of what is the current heat check of everybody's portfolio, or what is the current feeling of everybody of Facebook as it stands today. The stock is reflecting what everybody's feelings are today, but that doesn't change what does, like, and that's where I go back to, like, a lot of times when I look at, stocks, it really brings me back to the Jeff Bezos era. The company is not the stock and the stock is not the company. They still have sales. They still have folks that are willing to go through, you can say that, okay, hey, well, where is it that all the other small businesses, where are they going to go? And you can make a viable option or a viable argument for TikTok, one of their major competitors. But let's just read the tea leaves for a second. They have, if you really think about Meta as it stands, really, how many of those companies within Meta are actually, like, revenue generating? Like, truly revenue generating. We know Facebook, the overall platform, is revenue generating. Instagram, eventually, which they bought, is revenue generating.
And then WhatsApp, I don't think there's any revenue there yet, because
see, I like the way that you said that.
They started charging for WhatsApp Business in India. I was there and I got the notification. I don't think they went, but they were charging $1 a month, so it wasn't anything crazy. But think about how many subscribers they have. So I agree with Mark. The one thing you want to listen to, or like look at what they're saying, everything you're saying is already priced in. They already know this is going to happen. If I was you, I wouldn't sell here personally, because I think all the shit and all the negative talk is already priced in. We do see a bounce. This was way overdone. Sometimes people don't understand the words they say on these calls. They are very, there's a lot of energy and emotions to it, because people have money. And once one starts dumping, the other one does. Another thing I'd look at is this a leader that you bought, or is this a lagger? You didn't buy a leader for tech, did you? So when things start going up, the leaders usually are the first one. Then when things going down, these take the most beating. So that's one thing you want to look at. And in terms of opportunity cost, of course, this stock has a higher opportunities to go up now because it's at the bottom. I think in my opinion, I've said that this money, in terms of opportunity cost for you, wait for a bounce. It would be better used at other stocks personally. And I look at the portfolio as a basket rather than, because you're trying to do a probability game. So this could go zero, but the others do well, you're fine. And I think and I don't want to bring it too early, but that was kind of like, if you look at Kathy's vision, she was basically saying, if even half my shit goes to zero, I don't care. Because if one or two actually do what she thinks, like, I followed Kathy to the T. Like, I'm not trying to diss her, but that was her whole thesis. And that's what, like, if you listen to Ray Dalio, he's like, invest in 42 different asset classes. And then you're trying, it's going to go down. He knows, but you're trying to cover. So it's sort of hedged in every market condition. He used to call it all season collection. And that's kind of how I look at it. So is this like a single where you just went nuts and you want to kind of like lower your exposure, then that makes sense. But if you, and I think Mark said that, if your thesis on the company is the same, I wouldn't sell it. If something's changed, then we talk about it. But if it's already priced in, then I wouldn't sell here.
That's my sentiments perfectly.
Absolutely, especially since it's dropping down. So that's why I'm at the crossroads. I'm just like wondering, like, how much more do I have an ass beam do I have to take on with this company, right? Because
what's your time horizon goal for the company?
I mean, again, is like, 5 to 10 years, of course. So, but I also know this. So we're gonna be good 5 to 10 years. But this is the thing. In the meantime, right? For my issue is the dollar cost averaging. That's really what it is, right? Under no doubt, I know Facebook will most likely be good, but do I want dollar cost average? Because I've already done that. I've done that at 280. I've done it at 250. I've done it at 200. I've done it at 180. It's like, Jesus, how much more is it going to fall, right? And I think there's a lot of people are probably feeling like that. The problem is Mark Zuckerberg is putting a lot on this metaverse. And if this doesn't pan out, it's going to be really bad, right? Do you remember 3D TVs?
Yeah,
remember how everyone put all this effort and value into 3D TVs?
Yep. But think about how many of those 3D TVs that were purchased, though. And then think about, like, it was a lot of TVs. It was a lot of 3D TVs that was purchased. And then on top of that, it was so much of a big thing because of the fact that everybody started going to IMAX theaters and it was IMAX 3D. That was a thing. So it literally caused an entire industry to shift from, like, not only just from your, your residential commercial to now like enterprise, which is like your movie theaters. And then of course, like, here's the other part to it. If we didn't have those things, because think about how long virtual reality had been around before 3D TVs.
We go
like that technology.
We went all the way back to Nintendo.
Well, we do, but it's like, but think about it. Like, think about how long that technology had been around. But then it's like, look at some of the catalysts that had to take place along the pathway. I think that when we look at like where the metaverse is or where Meta the company is, yeah, we all understand that they're probably going to be the leader in the space. But you have to think about the countless amounts of catalysts that are going to have to take place within that 10-year horizon. And that's where, like, for me, it's easy for me to like say, and I'm probably sure that Mo, you can probably agree, is because of the fact that, that's where the VC hat comes on. When we make an investment in the company, okay, we made the investment, unless we're going to invest in another round of the company, we literally just like, okay, capital has now been deployed and essentially it's now dedicated towards this company that's within the portfolio. All right, well, we'll check in on it. But outside of that, it's like we won't see what the company is going to be for at least another 5 to 7 years. So it's like, okay, the money's gone. You may as well just wait and see what you bought and see what that becomes.
One of the biggest problem with stocks is they're too liquid. So one emotional episode you have and you can click the button. I think the question you asked, if you should dollar cost average, what's your opportunity cost of that money? If you didn't put it in Facebook or Meta, where is it going? Do you need the money? Right?
No, correct. But can I put it in something else that has more growth opportunity in a sooner time? And
but what would that be?
I mean,
what's your risk tolerance? That's the other question. What's the
there is going
my risk tolerance is pretty low, as you know.
Like, look at tech as a whole. Leave Apple out of the picture. Nothing is left at what it was. Apple's the only one that's standing. So
standing.
If anyone except Twitter, everyone is goated like hedge funds, but in real life, everyone's portfolio is down right now. There is no single person here who's up in terms of stock unless they went in energy, like took all the money and they were like perfect in terms of timing. Right. The problem is perception, and the perception is the information we consume. We go on Twitter, everyone's winning.
Everybody in FinTwit is winning.
Yeah. Right? Yeah. So that, and I'm telling you, man, most of the people, they get messed looking at it. I saw someone's tweet yesterday and she said, I made $100 and went on Twitter and someone made 100K and that ruined my day. And like, right? So if you know
terrible,
just stay away from Twitter. If you feel like you can easily get, I think you know the answer. You could possibly make more money. Yeah. The shorter, this is what I tell everyone. When you are good with patience, you can make a lot of money long term. But if you're not good with patience, you need skill to make money short term. So all these people doing 0 days weekly, they get wiped out because they don't have the skill, yet they lack patience too. And they're playing with small amounts and they're quick to take profit and very slow to cut losses. And overall, you kind of have to map out who you are as a person. And about the whole VC thing, the thing is, as a company, when you're making a decision, it's very robotic. But when you're trading, it's so emotional. For like Mark asked you, when did you invest? You said last year. From an investor's point of view, that's nothing. A year is like, okay, you're kidding with me. Like, let's talk 7-10 years, right?
Yep.
Thank you for saying it, because I was gonna say it. I was gonna have a different set of choice words.
That's when I realized that I'm not an investor in that regard. Like, if I do that real estate, like most of the properties we own as a family, 10, 15, 25, even 50 years, man. I don't know my family or myself owning a stock for 10 or 15 years. And that's kind of the personality type, right? So who you are as a person matter. I think your questions are amazing, because there's a lot of people where they're on the crossroad. They're like, fuck, what should I do? I've got like this 50% down portfolio and inflation's happening. And should I sell or should I not? I think the decision needs to be made now, not in 6 months, because in 6 months, things could get really bad or really good. Either way, you need to decide who you are as a person and what choices you need to make, because that's going to define who you are as a person.
Yeah, it's interesting. I said on the show like a week ago, or I said, you can't be an investor with a trader mindset, and you can't be a trader with an investor mindset. They just don't work.
Yeah, and I told you
if you're going to be a trader, then then have the trader's mindset. If you're going to be an investor, have the investor's mindset. And if you are, ambidextrous with both, and it's not that hard to be that, but it's just that at the same token, you can't look at your portfolio the same way that you look at it. Like, you're going to have to literally compartmentalize and say, okay, hey, this is stock. This is a company in which that I'm asking myself, do they have staying power? Like, that's the number one question that I ask myself when I'm holding any company, and keep in mind, I understand your pain with Facebook. Like, I bought Facebook on day one when it first came to the publicly traded market. And the stock literally just tanked. I mean, just tanked. And it's like, and then it's like, okay, well, do I dump the stock? Because, that was more than a 50% drop.
Yeah.
But at the same token, it's like, again, the company's got sales. The company has a roadmap as it pertains to what is it that they're going to do. Of course, Sheryl Sandberg is no longer there, but yet at the same token, Sheryl Sandberg didn't build Facebook. Sheryl Sandberg was only there to literally swat the flies that were out there in DC.
Mm-hmm.
So again, it's like, now that essentially that the company has gotten to where it's at, pretty soon we're going to reach a fork in the road where especially when we think about regulating companies like Facebook, America is going to have to make a decision as it pertains to okay, hey, do we prop Facebook up, or do we allow TikTok to ultimately overtake Facebook? That could be a discussion. Another thing is, does TikTok really have its staying power? Does it really have the staying power that we think that a lot of folks think that it does? I don't know. It's like we'll come to a point in time where video won't cut it anymore.
Mm-hmm.
And then at that point, what will be TikTok? We don't know. There's a lot of things in which that we don't know, in which that Facebook could be. But the things that we do know is, we know the moat that surrounds it. We know who the company is. We know what their DNA is.
We do. And it's also a notoriously hated company as well, right? Facebook. So we're in a really weird space.
But all the greats were hated.
They are hated. Well,
they hated Amazon they hated Amazon even harder than Facebook.
I think they hate Mark Zuckerberg more than anyone. Like, he's just not a well-liked person. I think if he stepped out and became more into the creative direction and let someone else do it, it might help. But my other question is, and I'm not going to say if, I'm going to say when China attacks Taiwan, it's going to happen. Everything points toward that. But let's say I'm wrong. If there were sanctions on China, where do you think it's going to start?
TikTok.
Yeah.
Well, isn't it already listed as national security?
Yeah,
that's what I was about to touch. Like on the government side, I can already tell you. So on the government side, TikTok, it's only a when. When is it going to get banned? It's just waiting on when is it going to happen, right? And then it will give an advantage to Facebook and stuff. The only reason why I'm stressing out about Facebook and why I can't sit here and say this is a buying opportunity, because again, like, if you're not invested in Facebook already, right? And with everything that just happened with it, do we want to guide people in the wrong direction, say this is a great price to buy at now, right? Because I'm already seeing people on Twitter saying, "Oh my God, the FOMO is going crazy right now," and people are like, "This is a great value. We should buy. We should buy. We should buy." But this might go down a lot further temporarily.
But it depends upon what that person deems as value. Like,
Mhm.
you know, it's like, you know, what I can consider as value, or what Mo can consider as value, or what you can consider as value.
Very different.
Very different. And at the end of the day, it's like, you know, the time horizons of what our expectations are. You know,
Mhm.
if I'm investing in the, like, it's weird to me when I hear about folks who invest in stock and only look to hold it for a year. Like, that's weird to me. Unless you're like literally trying to play hedge fund and ultimately trying to, like, you know, beat the S&P 500 every year.
Is that everyone's
Which,
goal?
you know, people really think that, like, you know, like beating S&P, like, it's really hard to beat the S&P 500 as a benchmark.
Mhm.
So it's like, you know, that's like, if you really think about it, a lot of folks, like, think about how many folks that work on Wall Street this year are probably going to be losing their jobs this year because of the fact that they couldn't beat the benchmark.
Mhm.
So again, it's like, you know, if you think about it, like, you know, if you said that your time horizon is 10 years,
I
mean,
will be fine. I just,
yeah,
do I
you will
want a
be
dollar
fine.
cost average? Like, do I want a dollar cost average
I
now
don't know.
or just wait? So that's
What
the
do you
thing.
think?
That's
Well,
what
let
I'm
me ask you
struggling.
this. What do you think the value of Facebook will be? What kind of company do you think that Facebook could be in 10 years?
I honestly, to be real, I think it would
Mhm.
probably be exactly where I bought it at.
The company?
Yep. I think
You mean the share
no,
price?
the share price. I'm sorry, not the company. The company would probably be worth. I mean, I don't.
I was gonna say, if they're winning in the metaverse, let's say if they take an exorbitant lead over the metaverse. So
Depends.
when we
Yeah, it
say
depends.
exorbitant lead, let's say that you have a 50, like when we say exorbitant lead, you probably have a foothold of 51% or higher as it pertains
For
to literally ownership of a
of the
space. Like when
company.
we look
Yeah.
at Tesla, sorry to throw that in there,
Oh, here we go
78% of the entire EV space. So
Yes.
what percentage do you think that that Facebook Meta
Meta.
will
They would
have
probably
as it pertains
have
to the
six.
metaverse?
They most likely would have 60 to 70% for sure. I
So
think if
what is
everything
that?
goes as planned, you could do the calculations. You know, I'm terrible with math. Don't put me on the spot.
So no. So
This is
I
my
won't do
show.
that. Well, no, because remember we had Paul, who's an investor in Web3. He's a VC investor in Web3 with a specific focus within metaverse. And he said that literally you're looking at a $16 trillion opportunity. When we think about $16 trillion, now it's not to say that Meta is going to have 16 trillion of that entire market cap,
Yeah,
but yet you have to think about all the companies that will literally, all the startups that will literally come through that space. And where will they be eating off of that?
correct. And if his assessment is 16 trillion, Facebook will probably have 8 to 9 of that.
So then if that's $8 to $9 trillion, then where does that place the stock over, let's say, a 10-year horizon?
I don't know, do you guys anyone good with
Even,
calculations?
well, I mean, I'm just saying, like, that, if you look at it like today, you know, currently what Facebook's at, what is it, 350 billion dollars in market cap right now, and the stock is currently at 104.
Yeah, is that where it's at now? Jeez, you can go further.
Well, you said 100, so I mean, we're trying
I said
to
we're
we're
going to
trying
go
to
to
mentally
100 by
prepare you
tomorrow,
for the
but I was like,
landing
ooh,
strip.
geez.
We're trying to
No, I was
mentally
like,
prepare. Honestly, in my opinion, I
I'm
think that,
prepared for
yeah,
tomorrow.
Facebook could probably see its worst, but then I think that as we move forward tomorrow, and especially like, you know, I think that, you know, this down 24 points or $24 a share or 18, almost 19% in the aftermarket, I don't think that that's going to strongly hold going into the close of the
Very long.
print
Yeah.
tomorrow.
It's kind of like
Depending,
Netflix, right?
but it's probably depending on other factors of what's happening. You know, again, it's like, you know, you get a Federal Reserve that comes through and says, okay, hey, well, you know, we're going to ease back on we're not going to stop raising rates, but we're going to ease back as it pertains to the strength or the aggressiveness of our rate hikes. Well, I mean, now what does that do?
Yeah,
You
that's
know,
where
a rising tide lifts all boats.
yeah, because you're I guess we should pivot into I guess the outlook, right? Of where we're seeing the outlook, because you're already talking about the Fed pulling back, right? You believe that, correct?
Yeah,
You
I
know,
think
I
that there's a
definitely.
possibility that there's a strong possibility that we'll see 75 basis points in November, so in the next few weeks. And then after that, you know, the question is, do we still do 50? But the thing is, from what we've known, and what we've seen over history, and this is like time over time again, the Fed won't just go aggressive and then like ease up and then go aggressive again. It doesn't work that way. When the Fed starts to reach specific targets, then essentially they start to ease back. If that wasn't the case, then it would have been November 75 basis point move, December 75 basis point move. There wouldn't have even been a conversation about, okay, 50 basis point move in December. So in my opinion, yeah, I think that we'll get to a place where when the Fed starts to pull back from that 75, then pretty much at that point in time, it's not, I wouldn't say it's not set in stone, but I would probably, I'm very confident to say that we'll probably reach a point at that place where we'll probably start getting into the 50 to 25 basis point moves where the market just absorbs those easily and it moves on.
It's like COVID. It's like COVID. So when COVID headlines started first coming, we would react very aggressively. Then the cases didn't matter. New York is crazy, 1 million cases, whatever. It didn't matter because people were used to it. I think everything we talk about, charts, everything is irrelevant. Everything comes down to Feds. Short term. Long term, we know what happens. Short term, if the Fed doesn't pivot and I'm bullish, it's just I'm front running something which is probably causing more pain. And I was going to cover the seasonality chart, which shows that mid-elections, we should move up. And I think like in 2020, if Google missed earnings, we would be down so much. S&P would be down. Today, Meta was down. Look at S&P. We're still holding 30 at 50.
Still holding it.
They're mechanical float. They're not going to let the market drop until the elections are done, unless something major happens. This is the part where you don't fight the Fed and you just go, okay, whatever I get short term, I'll react to this. Long term, yeah, you could keep buying. My only issue was from people that were saying fight inflation, buy stocks in January, and then Feb, and then March, and then April. I felt like there's no accountability on so I love this that you talked about it because we're asking you questions. We're not saying, hold Meta, average. No, the questions you need to answer and the answers will be different. And based on the answers, you're going to make a decision. So going on, just because you have a big platform of people following you, just randomly tell people go buy. I think that was very irresponsible. Like March, Shop was 800 and people were buying. And now I think Shop after the splits around 300. Long term only works for people that have money. Like if you are meeting ends and you bought stuff for long term, I feel bad because things I think will get a lot worse because even when the Fed does decide to pivot, the rich people are holding cash and they're going to know what to do. And people that are already stuck, most likely they're selling. And then they're realizing things go up. So that's kind of what my whole thing is. But if people are starting to buy now, it's perfect because you cannot time the bottom. What you could see is, are we trending down, trending up? Or you could wait, say, I'm going to wait for confirmation. Let the Fed say, usually most of the times when we're scared the most, that's when we should be buying. And you're going to look back, say, oh, it was all over there. I didn't see it because I was filled with fear. And that's why Twitter is sometimes not a good source because it's either we're back or we're dying. What if it's not anything? I think the longer term you look, the line is straight. When you go look short term, it's like this, and your emotions go like this too. So psychologically, you have to figure out who you are. And I keep saying that because if you don't know who you are as a person and you follow Mark or you follow me, it's going to be a losing game because we're both different ends to the spectrum. He's investor, I'm short term, and at times it might look like we're just disagreeing on everything. It's the time frame. We could both be right on a different time frame.
Yeah. I think that's realistically, all three of us know the market is going to go up in the future. It's always going to be upward trending, right? It's just a matter of when. And that's, I think, where you and I, M Square, disagree is where the time frame is we
got our first disagreement.
So yes, that I think.
So what's your time? So what are you saying? What's the disagreement?
I don't think because I think you seem to be very optimistic on Twitter, and you've been very optimistic for months. I
optimistic on Twitter, the company, or are we talking about just
no on Twitter when I see you?
Oh, okay. I was like, absolutely not on Twitter, the company.
But just in general and on your show, you seem to be very optimistic. Correct me if I'm wrong, because you still are buying calls, correct?
Yes.
Yes. And to me, I think that's insane. I'm like, in the current environment, I'm like, why in this current environment? And I understand it's 2 years out. I am not as optimistic, even 2 years out. I'm not seeing the market as optimistically as you
Should I
do.
give a breakdown of why is it I'm optimistic?
Yeah, no, that's what we want to get at. Yeah. So I want to see the reason why you are, because I think if you guys follow my show, obviously we have a lot more viewers than usual. So some people are probably brand new to Money Market Truth. So thank you for stopping by the ways. Make sure you subscribe, click that like button, and click the bell to get notified every single time we drop a video. But long term, I think Mo and I both, I think, agree that the pain is not over yet and is probably more coming. And I know that historically we can go back and look at, this is what happens when the Fed does this and et cetera. But I also think we're in an environment that's unprecedented, that we've never experienced before. We have too much shit that's happening right now, along with inflation and raising interest rates. And I don't think that even by next year or even 2024, we're going to be as bullish as maybe you feel we will be.
Okay. So the way that I look at it is I look at it from the standpoint of cost of capital. The cost of capital right now is expensive. I mean, I think that we can all agree there, right?
Yeah,
I mean,
absolutely.
I think that we can all agree, like, when Fed raises rates, the first thing that they hit is capital markets, and credit markets. Well, not capital markets, but credit markets. Credit markets take hits, and then ultimately it trickles its way on into other spaces. Like, let's say, the first thing that everybody looks at is auto loans, credit cards, and home loans, right? But then let's look at the other areas, like, for example, your junk bond markets, like, for example, corporate debt. Those markets, unless you got a solid, and of course, take a company like Apple, let's remove them out of the equation, because of course Apple has more than enough cash, so them borrowing money is just like joking money.
Whatever. Yeah, exactly. Yeah.
And I think that we can say that for probably like maybe the top 5 companies in the S&P 500 weighting.
Mm-hmm.
I think that if we remove those top 5 companies out of the S&P 500 weighting, then okay, now the money is very much so different. I think that we can all agree there. So my thing is, what happens when the cost of capital comes down, though? Like, that's what I'm looking at. The cost of capital is going to have to come down. Inflation creates certain things. It creates new equilibriums, right? Because due to inflation, especially, like we all said, it was unprecedented. But through that unprecedented, behavior and what we saw in the markets, look what happened. We saw we saw minimum wages rise. We saw wage inflation really significantly increase in order for businesses to one, bring on employees, and then like from that arena in markets in which you would have never thought that, that the cost of employees would have ever risen, they did. Because of course now you gave employees then had options. Of course, I mean, people say that, okay, hey, that the pandemic created inflation. I beg to differ. I believe that honestly, inflation was already going to be on its way when we started doing tax cuts. Anybody knows that when you do tax cuts, then ultimately that starts the inflation game. Now, it doesn't mean that it's going to immediately hit, but it's sooner or later. You could probably put a marker on it. What is it, 18 to 36 months that you're probably going to see some inflation hit the market. Now, of course, when we saw that markets went to a complete utter standstill, then that's when we started to see that the fans of inflation or the flames of inflation really started to rage very high. Now, I think that ultimately the beautiful thing that I love about it, and this is where the economics come into play, inflation alongside with recessions do one thing from what I've seen. They create a new balance of equilibrium. And I think that the market will find within the next, my base case is probably over the next 12 to 15 months, we'll probably see that the market establish a new equilibrium. So what does that mean? Does, say, for example, the cost of employees, so AKA wages, do they come down? No. That establishes a new balance, a new normal. Okay, when we think about the cost of materials, will they come down? To a certain degree? To a certain degree in some markets, yes. In other markets, no, it will not.
I think market will come down. Me and Q were talking about it. He was on, and I told you my background was HR. And even when I worked, they were looking at, so let's say Mark works in New York, Mark's getting paid more versus M Square, who lives in Dallas because the rent is cheap. They're saying now if we're telling people to work from home, why am I paying Mark more than M Square? That's one. Second is when you increase the interest rate and then you're increasing the cost of capital, cost of borrowing, everything's going up, you're going to hold back on buying. And even like, I know a lot of families are making a decision. What's the next thing we can cut that's not so important? Because people start to freak out. Now you got people like Gary Vee saying, hey, don't make any big purchases. Then you've got Rich Dad Poor Dad, who's been crying recession for I don't know how many years. He's
Ever?
He's going to be right one day, and he's going to be. But my point is that if we get into a point where people stop demand, because it takes time. Like even now, like when you go out, like you want to book an airline, airlines are packed, airports are packed, demand's high. Once things start to slowing down, I think demand will come down and supply will stay neutral, like what's happening with chips. I think when you say you want to buy calls, depending on the sector, the time period, you are doing what we call in trading counter trading, where we're going against it. There's nothing wrong with it. I do it too sometimes, but that's kind of what you're doing. In terms of probability, you're better off going with the trend. I do, however, think that seasonality wise.
By the way, I bought like calls in SQQQ, DVN,
exactly,
of course, WWE, and then of course I have my calls in Tesla, which represents like a huge part of my portfolio.
That changes the argument completely because you're going with the trend then, right? That's what you're doing. Seasonality wise, after mid-election, we should get a little rally and things do look more optimistic. But overall, I don't think the Fed, you've mentioned it too, it will be just like, okay, guys, we're flipping. They are so careful with the people think Powell fucks up. He doesn't. He's very careful on every single word. Sometimes, they ask the question and something slips and the perception changes or whatever happens. But until a lot of people have thought Fed pivoted, they front ran the call. Short term, they made money. Long term, they got crushed. I think the bias needs to have some sort of hedging because again, market, let's say you have $100. You're like, you know what? I'm going to take $1 and buy a leap. That's fine. You're fine. So I think the more information you have, the clearer the picture goes. Now, if Mark has $1 out of $100 into calls, it doesn't matter. Mark's got SQQ calls. He's completely hedged. Whereas me, I have $10 and I take 5 and like, I'm going to follow Mark and Mark takes a little paper cut. And I'm like, shit, who's going to pay the mortgage bill? That's the difference. And that's why we want to have this conversation. It isn't really like you're wrong or I'm right. It's more so the clarity and the context on what people are doing in terms of volume, size, time frame, mindset, all that matters. And these are the questions that viewers need to ask if they're not sure. Just because someone is bullish, well, what time frame do you have? And I think what Mark's talking about, you had a tweet where I think Mark told it, and it was basically the tweet was that you think Q4 things will get bullish or something like that. And it was me, Mark, and Tim, and we all disagreed with you, saying that, right. And we do it in a very respectful way, because if you're going to be an ass about it, that just tells me that you're not going to grow. Right?
Not Mark. Not Mark.
Whatever, man. I call you and I'm an ass either.
He will call me or send me a text message and then send me a GIF image alongside with it. But thank you, Mo. Thank you for being an upstanding.
Well, because look, you need to, and this is the conversation I have with Mark. When Mark first started, he was bullish, and that's it. Right?
That's all I do.
So I say that keep people around you that disagree with you, but in a nice and respectful way, and they tell you why, because that's how you will grow. It's good that you're on the other end, you don't agree, because that's how we're going to come to arguments where we're like, okay, he said this. Like the moment you talked about hiring, about Meta, that makes me bullish now, because I think people front ran the puts and it's down now. I think if you look at it bounce, it's 100. It's a big, strong call wall. It's a very strong pillar. I think people will start buying. This could see 125, in my opinion, within before the next OPEX, because that's what they do.
I was gonna say, and in a very, very short time, we'll probably see a kiss 125, and then have to make a decision there.
Yeah,
correct. Yeah, it's kind of like Netflix, right? Same situation.
Look at Bill Ackman. He was wrong. He dumped it at the bottom, and it's double now.
Yes, but let's just be real. Okay, besides Mark, who really thought that? I'm sorry, M Square. Who thought that Netflix was going to go back to $300?
You thought it would go up?
Mm-hmm.
Yeah. Mark was bullish on it. I was like, "Are you crazy?" I was like, "Are you crazy?"
I
think who would have thought.
I mean, I'll tell you why I was bullish on it. Honestly, it's like, okay, let me ask you, like, and it was funny because I just had this conversation with my wife. When you think about Amazon Prime, what do you think of? Like when we think about Prime Video, what do we think of?
Prime Video, nothing.
Okay, when you think,
okay, so let's just be real. Nothing.
All right, when you think about Disney Plus, you think about like all the nostalgic movies within the Disney library and the originals that they're trying to
Marvel
ride off of that aren't that great. Okay, but when you think about Netflix, what's the first thing what comes to your mind?
Stranger Things.
Okay. And then it's like when you think about all the content that comes out of Netflix, the majority of them are original.
Now they are, but the competition
when they first started
hasn't
out
really kicked in yet.
What competition are we talking about? Apple, which is the only one that I believe that really poses the strongest threat because of the fact that they can Apple can outspend every single one of these companies and run circles if they really wanted to.
Yes. Okay.
Apple has the cash. If they wanted to, they could buy Disney and then call it a day.
True. Now, I know people.
But do you guys think I worked for a telecom and a cable company, and we study trends, and the trend is people do something called stacking. They don't do replacing. They add Netflix, they add Disney. That's what we have. We have Disney. So I don't think Netflix will go down because people are replacing. I think what the study came, and it's basically they're saying there's an impact on the young generation watching TikTok, that their attention span is going down. And what people are doing, and the example was someone's watching a show and they'll pause it because they saw something crazy on TikTok. And then now they're an hour on TikTok and they forget to watch the movie. So the time is getting taken away from content in general, and people are going on TikTok, which is why in China, most of these apps are banned because they know what they like. You can't use WhatsApp, Facebook, and stuff like that on China. They have, I think, WeChat or something. But the point is, like, I think Netflix will go down. I think 160 was undervalued, but that's what happens as a trader. You look at where you can make money. As an investor, here's what happens. The drop was already, it's gone. It's done, right? So now the more you go, the lesser probability you have. It's kind of like you're full, and the more food I serve you, the lesser value you have. The stock just dropped so much. How much can you short it? And when the shorters got out, you got the pump, and then funds got back in. But the point is, people will be wrong. Bill Ackman, if he just held it, he would have been fine. But that's the point. We will be wrong. It's just accepting and moving on with it. So, Mark, you think in the next 12 months we go? So SPX is at around 38.50. What's kind of like your ballpark? What do you think?
End of the year?
Yeah, end of next
year. Talking me or him?
M square, sorry.
Okay. It's okay. I mean, I got it, but I mean, okay. So I will say this. I will probably place a target for the end of the year for the S&P 500 because originally it was 4,600 before all the things that transpired, 4,600, 4,700 or something like that. But now seeing what I'm seeing, I mean, I could probably see the S&P 500 at 4,300.
Okay.
I could see us at 4,300.
So this is the seasonality chart. We're looking at the red one, and if you look at it, there's this from November, kind of end of November, which is kind of end of mid-election, you see a spike. So it goes with your thesis, Mark.
Yeah. So it's like it's probably so it's at 43.50. I mean, give or take. And the thing that I think about that is that I believe that, especially when we think about investor sentiment, what did we just see? We just saw a significant amount of inflows that just started to like jump into the market, especially going into the close of the year. Other things that I'm seeing is that, and I've been talking about this all year, when it comes down to earnings, it's going to be a matter of bend, but don't break. And then also don't break your guidance. You break your guidance and story's over. You bend a little bit. Okay. You may get taken to the woodshed in the short term, but then at the end of the day, it's like, okay, hey, the company, the fundamentals and everything else are still intact. The thesis is still intact. The story is fine. If you're breaking just period, where it's like, okay, nothing's working, then honestly, and I think that that's what happened with a lot of those, SPAC related companies. I think that that's what's happened to a lot of the high flying companies that, really, they became kind of like unicorn based they became unicorn publicly traded companies, but yet there was no proof behind it. And those are the companies that you always see that they get deflated very quickly.
Yes.
And the fact that I see that, again, the fact that I see that, okay, I'm looking at some of the behaviors here of not only just 2018, 2019, but also from 2011 to 2013. And then, of course, during my beginning times around the financial crisis of really getting to see exactly how economics was really starting to play a huge role in not only just the economy, but the stock market. I'm seeing that again, that's why I'm saying that when I start to see that the Fed doesn't have to literally just say, okay, hey, we're going to stop raising rates. It's just that the fact that the Fed has to tell people that, okay, hey guys, we're not going to be raising rates as aggressive as we once were. So when we get to 50 to the 25 basis points, and then going from 25 to 0.15 in basis point moves, then we start to see that the market changes. Do I see that the Fed could probably get us to about 5 or roughly 6% in interest rates? Yeah, I can easily see that. But then at that point, it's okay, well, what else do you have?
Do you mean by when? By your time frame of 12 to 15 months?
I'd say I'd say probably. I think that we could probably get to 5 probably by over the next 9 to 12 months. We could probably get there.
In your 4,300 on SPX, you're saying by the end of this year.
Yeah, so by the end of this year, because by that time, it's again, you've gone from 75 basis point move to 50 basis point move. And from what I've seen in past behavior, Fed doesn't go, aggressive, then goes low, and then essentially goes back to high. At that point, they're trying to prepare for soft landing. One of the interesting things that I saw today was, I don't know if anybody caught it, but I'm probably sure you guys did. Did you guys notice how the 3-month inverted the 10-year?
Yes.
Yeah.
I saw it.
That was the one thing that I've been saying all year that I'm watching. I could care less about the 2-year and the 10-year inverting. I care more about the 3-month and the 10-year because that's more accurate. And when I saw that invert and I said, okay, hey, we've already had negative GDP quarters. Okay, yeah, we're in a recession. That literally confirms it for everybody. Now, at this point in time, and of course, it's one of the hot topics for apparently politics. Okay, that's a sign we're in recession. Look at the earnings. The earnings tell you more about the economic data than any of the economic reads that we see from the United States government. Because the reason why I tell you that it gives you a better read is because it's telling you of what's happening not only just here domestically but globally, and how it's impacting your darling companies here on the home front. So when I saw that the 3-month had inverted the 10-year, I think the 3-month had reached about 4.1, where the 10-year was at 4.05 or something like that. I said, okay, hey, we're here now. Now the Fed has to prepare for the end game.
Are you not concerned?
Mark, what's your thesis? Right. What's your thesis end of this year?
So my thesis is I think we're going to end. Well, which one? Me or him? Okay. So okay. I think we're going to end at around 36 to 37, and I tell you why. Because same thing like you were saying, we're now going to be officially in a recession. Not only that, looking at these earnings, this Q4 earnings was crucial, right? We still have Apple that's coming up, but besides Netflix skyrocket, unexpected, whatever, it did great. You were right about that one, Mark. No lie, I will not sit here and deny it. You were 100% right on Netflix. We saw Google didn't do so well. We saw Microsoft, which actually beat on both revenue and EPS, but their guidance and their outlook wasn't as good as they were expecting. Hence the reason why I sold off today. Facebook, terrible. Now we're waiting on Apple. If Apple doesn't perform the way they expect, I don't understand why you would believe that the market would go up to 4,300. Not only that, we're still dealing with the whole Ukraine and Russia thing, and things are kind of getting a little bit more tense.
Yes,
around that situation as well. Not to mention there's some stuff that's rumbling. Yeah, there's some stuff rumbling with North Korea and of course China. So I don't see anything that's positive to really push the market up and sustain it at 4,300 by the end of the year. I think we will probably get a relief rally to 441 maybe before we end up collapsing again. And then I'm also looking forward to the numbers for Christmas timeframe. Like, are people gonna go out and spend money? You know, we need people to stop spending money. Let's just be real. That's what we need. People need to stop spending money, y'all. Please stop. But to be honest, like, I'm not, like, I really hope that I am wrong, and I hope that Mark is right for the sake of my portfolio.
I just no pressure, none whatsoever.
Mark, go ahead, you're saying 3,600.
I think 36 to 3,700 is where we're going to end by the end of the year.
Okay. I think 4,150 is the highest we will go this year. I think we're going to go close to 3,500 by end of this year and 3,200 by March. That's kind of my thesis. We'll see how it goes. Well, I got a couple of questions for Mark, M Square.
Oh yeah, we went really far. It was really long. Sorry about that. I know we don't have you for a certain amount of time, Mark. So
no, it's okay. Today I got time, so let's do it.
So you know, when your thesis work out, you know, you play your cards accordingly. When it doesn't work out, like you see, okay, so you had a target for 4,600, and we all did. So it wasn't just we all were like, okay, 5K probably happens the way we were going. Well, how do you stop and self-reflect and change direction?
Oh, it wasn't easy at first, but I mean, over the years, it's definitely gotten easier. I mean, you got to look at what the cards that you hold in your hand. And then it's like you look at the landscape and you say, okay, hey, is this a winning hand that I'm holding right now? And that's where it's like I think the best investors or the best traders that we know, or that we think that we know, I think it comes from a deep area of honesty and humility, where it's like you have to have that deep brazen bravado in order to say, okay, hey, I'm going to go ahead and execute and push the button. But then you also have to have that humility that says this could screw up. And this could screw up badly. And it's like, and at this point in time, like, okay, hey, well, what does it look like on the bad side? And then for me, it's like when I had to readjust exactly what my target was for the S&P 500, it's like, okay, well, there's certain things that I could see that can definitely play out. And the thing is that I was looking at for the S&P 500 was the earnings growth, the PE growth for the S&P 500. And I think that the expectations for earnings growth was supposed to be 8%. Currently, we have to wait till we get through earnings, but I think currently as it stands, it's between 10 to roughly 12% right now in earnings growth so far. So, a lot of the things in which that we had as catalysts that, said, okay, hey, well, we should be high. Like if we're going to be reaching those levels, and we need to see blowout earnings, which we did not see. And then when we started seeing foreign exchange issues, like, when we look at Microsoft's earnings from the previous quarter, not this quarter, but when they announced that, hey, we're going to be hit with foreign exchange issues, which can definitely eat into our earnings. Okay, now I'm asking the question, like, okay, hey, who else is this? It's not just Microsoft. The only reason why we're looking at Microsoft is because Microsoft is one of the big dogs. But how many of those other companies that are not as big as Microsoft, that don't have the pricing power, that don't have the type of ownership within a specific sector, what does their earnings look like? So I had to literally go through and look at like sectors across the board. I had to go and look at the total market. When I looked at, let's take energy, right? Energy represented in the beginning of the year, 2.5% of the entire S&P 500. I mean, currently today, what is it? 6-8% now. Yeah. And the reason being is because of the fact that, okay, you take Russia and Ukraine, and Russia being a major provider towards OPEC, you had to have known, and especially like when we looked at, what the Biden administration was trying to do in 2021, which was trying to get OPEC to increase production, and they said no. So with that being said, it's like, okay, hey, well, for everybody out there, when production increases, then prices come down. When production decreases, then prices go up. And so when we saw that, when I saw that personally, I said, okay, hey, now I have to go back and readjust here, because, I just don't see us reaching those high levels, because the earnings just aren't going to be there. And especially in an inflated environment, when we think about cost of capital, yeah, you could bring in $100 billion worth of revenue, but that $100 billion of revenue isn't the same $100 billion of revenue. Like, for example, like Apple bringing in $100 billion of revenue back in, let's say, 2019 isn't quite as sexy as bringing in $100 billion of revenue in 2022, because the cost of that is different. The value is different. And so that's the reason why I said it's like, okay, hey, I have to just go back and like the data tells me. And it's like, it's easy to go with my own bias, but then at the same token, I have to look at what the data says. Maybe that's me, like, being a former cancer patient also. And like, hey, look, yeah, you can go ahead and pray on it and like, hope that this cancer goes away. Or it may be time that we may need to start triaging so that way you can get well. So those are the things that you gotta look at. And it gets easier over time. And it depends upon and I always believe that investors or traders are always at the subject of their prejudice based upon the timing and when they come in. So if you come in a bull market, then yeah, the one thing that you're gonna know very, very well is bullishness. But then you're gonna have to learn how to be bearish. You're gonna have to understand what it means to be bearish. You're gonna have to understand the tendencies of a bear market. Okay. If you came during a bear market, you're gonna be you're definitely going to be like literally skeptical of any move to the upside that the market ever gives you. And it's just those types of things that we look at as it pertains to the psychology. But the people who do good at it, they understand and they're honest with themselves and they're humbled in the sense that, okay, hey, this could screw up. My thesis could be wrong. I have to be okay with being able to adjust.
Awesome.
I know I said a lot, but hopefully I answered the question.
No, that was a good answer. Go ahead, Mo.
Okay, so the next question I have, and this is basically for us too, we'll learn from it too. So you've been teaching for a while, right? You've been teaching and you've been doing it for completely free.
Yeah.
My question for you is, if you had to change one thing, and it's not like teaching something new, would you teach something differently? Because I know, like when you teach on YouTube or when you're teaching on a platform, there's not a lot of back and forth. So you do your episode and you're done, and then a week goes by and things can change. Like
things can change in a blink of an eye.
Thesis can change in a day. Mine changes every hour, right? I'm a trader.
Yes.
So how would you do that differently now? If you had to redo 2020 or 2021?
If I could redo 2021, because I would go back to 2021. If I could redo 2021, as much as I would hit on the points as it pertains to like the sinisterism that I saw coming, one of the biggest things that like it haunts me to this day that I could have been more vocal about those things. Even some of the conversations that I was having in Clubhouse, at the end of, I think it was at the end of 2020, I was saying, okay, hey, 2020 was good, but 2021 isn't going to be as good as 2020. And I could have hit those things harder, on the platform. One of the biggest challenges is that, especially like you said, being on YouTube is you only get so much time to be able to share something. And it's like, the secret sauce behind the Come Up series, I'll just share it, is, many times it's like every single lesson that you guys see us do on the Come Up series is more so like my mentorship session with Jolene, because I started off, being a mentor to her and teaching her about the market. So it's kind of like if we could create a platform in which that, I still get to teach Jolene, I still get to share knowledge with Jolene, but at the same token, everybody, it's pretty much like if you had the best of the room. So you had Warren Buffett's, even we'll throw in Bill Ackman, but let's say, every single person that you deem that is some of the most amazing thought leaders. Hell, even if you had Jamie Dimon in the room, and if they were just teaching one person, but yet they left the windows open so that way you could see and that way you could hear. That's literally the way that we look at the Come Up series. But at the same token, there's a trade-off there, because not everybody is at the same level as the person in whom which that you sit there and teach. Not everybody understands exactly, like, has put in that has had that type of time. So yeah, the things in which that I would have loved to teach are the things in which that I could have possibly come through and said, okay, hey, share this also. It's like, it's just more so I wish I had more time, I guess, to do shows and to like literally sit down and like go through these things even more, in greater lengths of detail. Yeah, that if I could go back and change that, I think that would have been huge. That haunts me every single episode that I do live on YouTube. I'm nervous before we go live. Even to this day, after I don't know how many episodes that we've done, I'm still nervous because of the fact that it's just like, I know that I'm going to miss something. And when I go back and watch it, I'm like, oh shit, I could have said this. I could have said that. I could have done this. And it's like, there's nothing else that I can do. So hopefully the only thing I can do is like hope that the conversation continues. But yeah, those are the things that haunt me that I wish I could have done differently.
I just had one follow-up questions, and it's just talking to you we've been talking for an hour. I could tell like what you are on Twitter and what you're on YouTube versus talking to you one-on-one. You're a completely different person. You're super humble. Like, on be honest, on Twitter, you come across cryptic, right? It's like, is he trying to be cryptic, or is he just trying to keep his peace and just want to not say too much? And kind of like, because I understand you say too much and people just follow it to the line. And then people are like, fuck, like I lost money because of you. And you would rather, so I understand that. Do you feel like, so I started trading options around 2020 when COVID happened. And I see, like I used to watch, there were 4 or 5 people that were leading the charge in terms of option. I started off with Todd. I don't know if you know Todd. Like he started trading option in a pretty big group. Like we had 10,000 people. And what I realized was, and I'm not talking about him, people that were growing at a very fast pace, like those leaders, were super like, I told you so. I did this. And when it came to covering up for all the wrong decisions, which is fine, we all make that, they wouldn't talk about it. So if they gave a target, it went opposite. They wouldn't, but they would pile up with all the stuff they did call out. I feel like we're in 2022 and they are outdated in the terms that they did very well in 2020. Now they have zero clue. Yet what they've done is they've created this massive platform and they're leading everyone on the top of the mountain hill because they have no clue. These are the same people telling you to buy shop at 800, specifically saying buy this and you're hedging against inflation. And so now they're screwed by inflation and their stock is down 80%. How do you, because you were in my opinion, and I'm saying this as a compliment to you, you don't do that shit. I've never seen you go do that. Do you ever feel like you could do the same and kind of either charge or go bigger? Because I feel like that brand sells much faster than being humble, which me and Mark talk about, like we need to start doing more of that, but then we're not like that, so we don't.
Yeah, that's one of our hardest difficulties in growing this channel, really is like what he was saying, is the bragging. The bragging really helps people grow the channel, but it's so ingenuous.
Bragging without accountability. You know what I mean? So bragging without accountability. That's the whole
ingenuous. There you go.
The mix.
So I'll say this, and y'all, it's been so hard for me over these past 3 years, like, because I'm doing a job that I never thought I would ever be doing this. And I look at it as a job because of the fact that if it keeps you up at night, if it stresses you the hell out, you don't have to get paid. Tell every single founder, entrepreneur that's not getting paid for their idea, it's still a job. But yeah, it brings me back to being an entrepreneur where it's just like, yo, I did this because of the fact that I didn't want to be like everybody else, and I think that that's ultimately how maybe I've built this brand around the Come Up series or around myself, is the fact that I didn't want to be like the status quo of everybody else, and I honestly, partly I didn't think that I was that good, if I'm being honest. Like, I didn't think I was that good enough to be in a state where I can literally say, okay, hey, I'm going to charge people $5,000, $10,000, $40,000 for a course or a program. And partly also it just didn't make sense to me because I'm like, yo, it's like, would I rather spend $40,000 to do this, or would I rather spend $40,000 to go study at Harvard? So, I mean, for me, it's like, I look at it in the sense of, I didn't want to be like everybody else because, one, it's easy to be like everybody else. Yeah, of course I could go out there and charge and everything else. And honestly, it's like, I'm not the type of person where it's like, I think you guys have seen me long enough to know that it's like, I don't celebrate my wins. I talk more about my losses more than I talk about my wins. And the reason being is because of the fact that there's more learning to be done there. Yeah, so a person wins, but what did you learn from that win?
Nothing.
Right. shout out to a good friend of mine, Prentice. He said that there's in every lesson there's an L. And so for me, it's like, I just never felt the reason to like literally be the type of person to brag. I think the greatest flex is, just make other people successful and let them do their thing. When you let other folks, when you help other folks find their way or find their path, and when they become successful, I celebrate those individuals. Like where it's like, the folks that, the father that didn't have to work at a prison anymore, but he could spend more time with his family, or the families that literally, that could literally, do whatever it is that they want to do and focus on that next dream that they want to build. And then, they share it with their communities and talk about how they reached or how they got there. Me, I look at it in the sense that I represent maybe a small single piece of that entire puzzle. Why? Because the only thing that I did was I just literally shared knowledge of something or taught something that I thought was interesting that everybody else should know, but I wasn't the one that was pressing the button. Who am I to tell people or to brag on behalf of other people when I didn't press the button for them? I just don't feel warranted that way. I don't knock anybody who charges a course for a course or for a platform or whatever it is, because at the end of the day, you still got to make a living. I'm just saying, just be good at it and also be humble at it. That's it. If you have those two things, and if you give people the very best of what you can give them, and that the value matches exactly what that is, and it's like, it's more so in the sense just to cover the cost of expenses, but at the end of the day, it's like you focus more so towards being that teacher, being that guide. I have no problem with that. If MKBHD today, like for example, he charges now for his masterclass. He's one of the, like, if you notice the content that we produce, like that's been pre-recorded, and even in the live cameras that I do, I use a lot of the tech from MKBHD because of the fact that he's one of my favorite YouTubers of all time. He now charges a course on masterclass of how to edit and everything else. Do you think I bought it? Hell yeah, I did. Why? Because of the fact that, what he did was good. And it's something that, like, I could see the results. That's something that I can verifiably see that this man has X amount of subscribers. The content is consistent and everything else. I would pay for that. But again, it's like, I don't believe in like, and it's like, we hear the word gurus or financial gurus or FinTwit, where everybody only wants to talk about the wins. And then of course we commercialize it. I've never seen any of the wealthy people that I know literally brag about, their wins or anything like that. I've never seen them brag about like, and throw it in people's faces. They're quiet.
So Mark, most people with real money never talk about money.
They don't. They don't talk about money. They talk about like the next project or the next this, or, the things in which that they find interesting. They don't talk about like, no, we don't talk about money.
Yeah.
Can I touch on something real quick, Mark? And
go for it.
Because I've so this is not like rumors or anything, but I want you to address it because I know you, right? So I know you. I know what your intentions are. I know that obviously, when you first started to come up, it was in 2020. Everything was running up. The rolling fours worked, all the other stuff. And then, we went into the bearish territory and things just not panning out as well as we expected. Now, there's people who've been taking advantage of you by just simply saying one of the reasons why you don't charge is because so you don't have any responsibility to anybody. And I want you to address that because I know you. I know that's not who you are. And I know that was never your intent, but I know people will use that as like the reason why he doesn't charge is because he doesn't really know anything and he doesn't hold any accountability for what he teaches because it's YouTube. Because realistically, like kind of is how YouTube is, right? You could put anything out there, and if someone follows you, they really have no responsibility. You could say the Earth is flat, and someone will believe it, and you have no responsibility whether or not they do that. So that, and then this weird concept that supposedly you're doing this to bring people down, which I don't even understand
how would that work?
Purpose of that. I don't know.
I don't know.
Like,
I don't know.
I legit heard that like he purposely is setting people up so they can fail and lose money. I don't understand. That has to be the most diabolical plan ever. But I don't, and I wish that the reason why I'm just bringing this up because I know probably some people in the chat have heard that, and I know not everybody knows you on a personal level.
Yeah.
I was fortunate enough to get to know you, and that was never your intent to do that where you don't have any responsibility whatsoever. I mean, could you use that? Sure, it's free. You have no responsibility, but just knowing you, and then you kind of explained it, you do treat it like a job, and it is pressure. Anybody who's in this business, point blank, period, even Mo, knowing like what he does, it takes a lot of pressure. People don't start this to want people to fail, especially people who end up, not charging that much, but the goal is really not to have people fail. The goal is to have people win.
Yeah. Like that's the reason why we're in it. We're in it for like like I said, our greatest enjoyment, our greatest pleasure that we gain out of this, that literally feeds our passion, is to hear about the stories of folks in whom which they're winning, or to even the folks in whom which that haven't even gotten started yet. Just the folks in whom which that their entire conscious has changed as it pertains to like being able to develop their own thesis. They think differently because of the fact that they see information completely different. They understand their understanding of a world that once upon a time seemed so far away, seems so close, that the fact that they can kind of like taste it in the sense of, understanding markets, understanding economics, understanding what these data points mean when you see these readings. Whereas, beforehand, you would just hear about it on CNN if they ever reported it, or CNBC when they report it. And it just doesn't seem like, okay, hey, well, I don't understand what this means. Like, people understand what companies do. They also understand it now, where it's like it changes their entire landscape of how they even see the companies that they work for now. That to me is why I do it. Like, I don't do it to take down anybody or anything. I don't even know how I can. I don't know how I can do that. Like, honestly, it's like, if somebody can tell me how is it that I could produce content to literally, like, unless I'm literally like going after a person or seeking legal action towards a person, I don't see how is it that I'm taking another person down. I don't understand that. The part where it comes to the responsibility, I feel that sense of responsibility every single day, every single time that I turn on the button to literally show my face, which, honestly, it's like, and I'm probably sure that you guys understand this as content creators too. We take a great deal of risk of putting our own reputations, ourselves on the line every single time that we do a show, whenever we talk about something, even if we have a Freudian slip on something, we're out there on the front line. We're out there like literally talking about something that can literally be used to scrutinize us. And for me, it's like, I'm okay with scrutiny because I believe that, when you go through that scrutiny, it makes you better. But the fact that, that it's some type of devious, sinister plan, I mean, come on, that's a little sick.
Yeah. So I just want to address it so people can eventually reference this if they need to. So, but I got nothing else. I mean, I do, but we way over time. I want to argue.
You guys got time. You got time.
We go
Look, no, I got to like 4:45. So I mean,
do you have any other questions?
Well,
Mo?
I was my question was, it's back to the same thing. I feel like if M Square, if you I think spoke out more on Twitter, people would actually understand the context, because I think, so you're doing what we're doing. You want to talk about where you lost, because then you'd be like, okay, so this is where I messed up. I'm going to fix it so it never happens again. But what ends up happening is the perception is this guy's only taking L's because that's what you're talking about. So I think if you provided more, because I'm talking about as a viewer, when I know you from Twitter or YouTube, and YouTube I don't like as a platform when it comes to trading, because your opinion can change in a week, like I said, and in terms of investing,
life happens in between from the moment that you record and then the video's over.
So, like, do you feel like you don't like providing more context in, like, because right now you're like, you bought calls, but then you're like, no, this is what I bought calls in, right? Do you feel like you don't provide context because that kind of causes more questions, or like, what's the reason behind that?
The reason why I don't do it is
because, basically,
the reason why it became cryptic, and I'll tell you the reason why, because of the fact that it started to break into the privacy of, like, within my own family, my own home. Like, that's the part. Like, my first priority as a husband is to protect my home, my wife.
Yeah.
when I like, and two, I was like, I didn't want to be known as a call out service. So that's the reason why it's like, that's not my thing. That when I create the pick list, I create the pick list of companies in which that, yeah, these are companies in which that I'm definitely looking at, or I probably am invested in, or I will probably look to be invested into. But, these are things in which that are on my radar. When I mentioned that I was buying calls in T.W.A.D, which I'm still holding those, by the way. Yeah, I mean, it's like that was probably the last time that I probably mentioned anything that's probably within my portfolio. And the reason being is because of the fact that, I said, okay, hey, I started looking at the entire landscape and I said, okay, hey, this financial literacy space is definitely like, honestly, it needs to change. It's like, let's have forget about what's in my portfolio. Let's talk about the conversations that literally need to be had as it pertains to, bringing folks on for portfolio management, having folks, understand what it means to put together your own thesis, understanding the things that are actually coming down the pipeline that are actually not only just going to happen now, but later on, you're going to remember watching this video and remember, okay, hey, I learned that. Let me go ahead and start to maybe apply that knowledge, and especially in a different time frame or in a different timeline. So that's like, if you notice, like there's been a huge shift as it pertains to like the way I produce content or the things that I discuss now on Twitter, on YouTube. I've changed the entire landscape as it pertains to what is it that we do, because of the fact that, things have got to change. The conversation's got to change, and how is it that we move it forward unless we just consistently just do the same thing over and over? Like these are this conversation that we're having now, like these are the conversations that need to be had, where it's like, okay, hey, where we see more platforms do these types of things, where we get into the weeds, we get into the mindset, we get into the sentiment, and we discuss them from each person's vantage point. There's things that I pick up from you, Mo. There's things that I pick up from you, Mark, in this conversation as it pertains to, maybe I need to like definitely go take a look at this and see exactly like, how did he get there? Those are the types of conversations in which that, and I'm probably sure if we looked at the chat, I think that honestly that everybody's probably gained that same type of value where they say that that's really where the gems are.
I agree.
So, I mean, I guess, that's the reason why I went from, the calls that I talked about to like, it seems kind of cryptic, and also partly because I want people to also think for themselves. Like, that's the other part. Like, I want people to get to like, the way I consider success is when people don't need me anymore. Like when we get to a point where it's like, you no longer need Mark and Jolene or the Come Up series anymore, but the Come Up series is there for the next wave of folks and who wish I want to get into space, because hopefully it'll still be around as long as YouTube's still around, then you can utilize it. It's kind of like an encyclopedia. But I will consider that successful when people don't need me for the conversation, or even when they feel like, okay, hey, I feel like I'm going above and beyond what is it that Mark teaches. Great. Like that's the way that it should be, where the student eclipses the teacher. So, I mean, but yeah, I'll work on my Riddler. I'll focus on getting better.
I just think a lot of people would understand you better, and it would like help, because I think a lot of people go the shortcut route, which is the call-up service part, where I don't want to do any work, feed me with a golden spoon, and when the person's wrong, which happens, and I've seen a lot of people that were great in 2020 are now like, I'm like, who are you? How did you trade in like what are you? And you have a massive following. You're telling people to just do something specific. The second point is the kind of platform you have, and I remember I told you it was part of a Slack group with 10,000 members. What I saw was when we were playing small names like Palantir, and you would call a single chain, it would destroy the chain. And when the admin, whoever did the call out, is like, okay, I'm going to get out. And let's say I'm gone to grab a lunch or gone to the washroom, I'd come out and be down 80%, because even though the chart didn't move, the premium went up crazy and then it went down because the people are now exiting, and you're kind of creating the exit liquidity for the admin. And
I didn't do that, did I?
Well, you don't.
No.
Oh, okay, I was like, whoa.
I'm saying the kind of platform you have, it's good that you're not doing that, because
Yeah.
that's the problem that we faced. And
Yes.
that's why I don't think this option's working along, because if you're talking SPY, QQQ, it doesn't matter. But when you get into Palantir, Neo, all these smaller ones, you could literally destroy the chain. And then the last thing, like, and I don't know if you agree with me or not, I've been doing this and teaching this for about 2 years. And one thing I've noticed as a visible minority, there is a certain kind of trauma people have with money, and
Yes.
that impacts them in trading. So
Yes.
no matter how much time I've spent in strategy and this and that, when it comes to execution, that's where it's the hardest to push the ball, because people are scared to lose. And it's because of the trauma they've had as a child, or the stuff that their parents told them because they didn't know anything better. And it's like even my family, when they find out that I'm trading, they think I'm gambling. And they're like, oh, you should find a regular job or do a proper business, because and that's kind of what they think the stock market is. And then when you lose, you automatically tell yourself it's because I'm gambling, if that makes any sense. I think as I've been thinking about that a lot. I think we as a community should pool, and I don't know if we need to bring a therapist or figure a way out that we teach the therapy part and the attachment with the money first before we get into money part.
Well, interesting thing that you said that, because Jolene and I kind of held a town hall with the community of folks that follow us, because it's we, as a creator and on top of that, going through what we've gone through, it's we literally had to sit back and it was very enlightening for me. It was tough. Honestly, I had to go pour me a few Hennessy Beautifuls and also maybe some old fashions after that. But yes, Mark, I definitely dabble. So maybe on the next time I'll have a glass. But no, it was tough, because I'm though that I'm not hearing anybody speak, I'm seeing it in the chat. And many times, even when I go live, the ARC positions that don't pan out, or let's say, people that gave up on AMD, or, even folks that are giving up on, whatever, the strategy. For me personally, I still use my rolling 4 strategy. That's just me personally. Now, is it a mixture of calls and puts? Yeah. But for me, that's just a strategy that I've just used for so long that it's like second nature to me. But it's hearing the trauma of everybody else, the things in which that they're going through, the challenges that they're facing within their portfolio. Of course, you can literally you empathize, because I've been there before. Any of the best traders understand, you've taken losses before you've become great. I don't trust anybody that literally says, okay, hey, I came out the womb with my shoes laces and literally was just batting 1,000. If that's the case, then honestly, I just call it straight up cap. Unless you want to pull your books and literally show me 10 years worth of your trades to just show that, okay, hey, that this is what's happened. And if that's the case, and if you don't want to show it to me, then go to a JP Morgan, Morgan Stanley, or any of the fine institutions and literally sit down with them, and they'll definitely give you, what is it, anywhere from 250 million to roughly a few $1 billion to manage. And then that lets me know, okay, hey, you're certified. But again, it's hearing the trauma of the losses, I can empathize because of the fact that I've been there. And it's you don't want to see those things. But it's but it was also something in which that it felt liberating to be able to understand and to hear people and let them know, I hear you. I understand what you're going through, And on top of that, it's it's if you have constructive criticisms for me, it's I want to get better. I want to get better at being able to be a better teacher. I don't want to be like the public school system where it's okay, hey, people give teachers and systems critiques and yet nothing happens. And it's okay, hey, the school system's trash. I don't want to be like that. I want to be something in which that is always progressive, always innovative, and something that always pushes the envelope forward. So again, it's yeah, those are strong challenges. But again, it's it was something that was unexpected. It was something that was difficult. And I look forward to possibly, I had a conversation with Q, and he was yeah, you should probably look forward to having, if doing those every now and then, checking in on the community and doing heat checks, and seeing that, hey, are people okay? Because a lot of people are going through a lot of things now, as it pertains to the, what you mentioned, as it pertains to the mental health part of it. I strongly advocate for that. I think that honestly, it's like, for me, one of the things that I wish that I had beforehand was a therapist when I first started as an options trader. It would have saved me a lot of revenge trading. But now I look at it today, I sit down with a therapist twice a month. And I talk about not only just the things like, because, people don't understand, like, when I say, entrepreneur, like I run FTC, AKA From the Culture. At FTC, we have probably 11 companies that are part of our portfolio that we're building. That's stress upon stress upon stress upon stress. Then on top of that, to do trading or to invest, and then on top of that, to literally teach a platform called the Come Up Series, and to try to position that to move it forward, to bring in other content creators. Like, this shit ain't easy. It is not easy. So like sitting down and talking, and then on top of that, I'm a husband, and the challenges that I go through even in my own personal. So yeah, there's a lot of trauma there. Like, I find myself very, very lucky though that I had my grandfather that literally kind of helped prepare me for some of the hard roads that were going to be in front of me years later down the road, or decades later. I don't think, we all don't have that within our minority communities. And it's something that, honestly, I think that, relationships with money, relationships as it pertains to investing, the mental capacity of it, the hurdles, addressing all those things. I think that those are all great points. And I think that they, I'm going to go to probably Jolene after this conversation and be like, hey, Jolene, so I was talking with Mo and Mark, and, and it's kind of interesting because that's ultimately how Wealth Rituals was created. But hearing that lets me know that, okay, hey, we can do more, because her thing was to try to address some of those traumatics, within her series. So, but it's given new life and saying, okay, yeah, let's do more of these things, but let's get even further into the meat and potatoes of it.
All right. Thank you.
Yeah.
Do you have any?
Oh, thank
I
you.
mean, I definitely, we need to bring you on again, because I know some people were here for the Tesla conversation, and I know you prepared.
I mean, no, let's have it. Let's have it. Look,
Mo, do you have time still, Mo, or no?
You could, go, keep going. It's fine. Figure out later.
I'm like, yo. I mean, if you want to do it as a part, that's fine. I can always come back later at another time, but just know, other data will probably come in at that time. So
yeah. Oh, well, let's try to keep it real quick so people can get in, get the debate done. All right,
let's do it.
You're a Tesla bull.
Yes.
Me and Mo are Tesla bears. Mo thinks Tesla's go. Where do you think Tesla's going?
You too, Mo?
So again, I'm a trader. So short term.
Okay. Yeah. So short term. Yeah. So we're talking about, like, again, within the short term.
Year. So like within the next month to a year.
No, yeah. I'm thinking the next year. I think it's going to 165. Mo, where did you say you thought it was
150,
going?
150.
150. You don't think so, right?
Don't.
Okay. Now, so I'm gonna give you my reasons why, and then you can debate back, because we had this conversation right over the phone. But there's a lot of stuff. I feel there's a lot of hype around Tesla in general, and I feel like I feel that the company is completely overvalued. I understand the tech that comes with it, the AI, et cetera, and Elon's genius and blah blah blah. But I also think it's also off the hinges at times, and it could potentially hurt the company. I also noticed that because when Tesla was at 300, I was telling people it's going to go to 205, and everyone said I was smoking crack, and it went to 205. And I still think it's possibly go lower, especially with the whole Twitter deal. I just saw one of my subscriber, Bacon, was saying that it looks like the deal is already sealed, or is about to get sealed. But I think so has he finished with all the selling?
So he has to declare within 2 days after he sold. So I think if he does, we're probably going to know by tomorrow. I think it's done, because I saw a statement that he got fund. He got a couple of people who will be funding it, and if he was going to sell it, we would have been down a lot today. Today was actually up, so I think he's done.
Okay, and then I noticed also, like, I just think that in general, when all the other vehicles start coming forward, that it will start taking some of the market share away from them. We already saw with China. I think you and I had the discussion that I don't see China really pushing Tesla as the forefront of their EV vehicles. And I think that's already been proven, right? They already showed that he's got to lower the prices and stuff. That happened from our last conversation. Also, I just saw that 3 hours ago. It looks like they're about to do a criminal probe of a self-driving. I see that the Texas. Don't roll your eyes.
Isn't it funny at the same time that Ford dropped its autonomous division?
But
this is the same conversation.
But this is what I'm talking about. It's like I don't, under no circumstance do I think that Tesla's a crappy company. I don't. I think it has way too many challenges to sustain this growth that it's been on for the past 2 years, and I think the company will sell off to at least 165. And
what's the one catalyst that sends Tesla down to, let's say, 160? Like, because it has to be something strong that the market doesn't already know about.
I think it's the Twitter. I want to see what happens here the next couple of days with the Twitter deal. I think it's the US probe is just something extra on top. I don't think the sales in China and Germany are going to be as great as expected. And I also think that himself and how he likes to insert himself with the culture war, that could possibly hurt him too. We saw it with Disney. Disney got hurt temporarily with all that culture shit. We can't sit there and deny it. It literally went down significantly.
Yeah, but let's just be honest. Bob Chapek isn't Bob Iger.
True. That too. I can see that some of this stuff can hurt the company itself. And in the end of the day, regardless of how many awesome things that Tesla has, most of his sales is still coming from the vehicle itself. Not to mention, I don't see the government. He's got such a weird relationship with the government, even with the tax break that Biden has. If you look at the tax break and read the fine details, there's all these stipulations on Tesla even getting the $7,500 credit. And I don't see them really pushing, again, even in the United States, I don't see them pushing for Tesla as like the major EV vehicle, even though it should be. I still see them pushing GM, pushing Ford. I think that he's got a lot ahead of him and a lot of competition coming in the next year that I think will hurt the overall valuation of the company and the stock.
Can I say something quick? And I'll let me add one more thing. I don't think Tesla is going down. I think everything is going down in comparison. So I don't think Ford can. So when you talk about EV, Tesla has years and years of experience over everyone else, like everyone else. You know what's going to end up happening? It's what happened with wheat stocks. Hundreds of them came, and then the best ones stayed. And the one that were good, they got bought out. That's what's going to happen with Tesla. They're going to start buying stuff. But what I'm saying is, how many recessions have you seen where the VIX is at 35? I think a lot of people have their cash parked in Apple, Tesla, Microsoft, and they are the last one to fall. The whole reason why Tesla is down right now is because Elon's selling. If Elon wasn't selling this thing wouldn't have even touched 200. But you get 1 week of panic selling, you get 150. Does that make sense?
1 week of panic selling.
So I don't think something's gonna go down because they're shitty. What I'm trying to say is, and I'm not even
they just go down with the market. Like, just like I said earlier, rising tide lifts all boats. When the tide is gone, it sinks everything.
And the strongest companies are the last to turn, which is why, like GS said, Apple can go to 103. The way I look at it is, if Apple goes to 103, where does SPX go? What happens to Tesla? What happens? So that's how I look. I look at the macro view. I don't have anything against Tesla. I think all these cases are BS. There's nothing to it. There's nothing. It's a case. Those anti-law cases against Microsoft, they've been going for years. When the hearing happens, they go down, then they go up. This is normal stuff. Macro-wise, it's all going to go down. And so far, what we've seen is growth companies are down 60 to 80%. UPS, Affirm. But the good ones have stayed. That's where the money's parked.
Yep.
At some point, you're going to see a big company go down and you're going to see a panic sell. I can count 4 or 5 days where we had panic selling. Everything else has been controlled. So that's kind of where my bias is. But yeah.
Well, I could say this, Mo. You just lost me as your co-host, so the other Mark can take over because you just backstabbed me. We had this plan. We had this calculated.
I knew he was coming forth with a tactical plan. I knew it. Okay, so here's I'll keep it brief. Yes, I do see competition coming forth, but I don't see any of their profit margins even like coming anywhere near close to Tesla. Like, that's the biggest part. Like, when it comes down to like competition, like, it's just like the Apple, Samsung, and Android, Apple versus everybody else. Samsung can produce as many phones, but their profit margins won't ever touch Apple. And we saw what happened with the rest of the companies back when they were having the conversation about Motorola and all those other folks. So we don't have to rehash that. So then when I look at, let's say, the vehicles in China, yes, zero COVID has definitely been a huge hit to Tesla. I think that demand is not going anywhere, because if you go and look at like Tesla's, like, you know, if you want to use VPN or however you decide to, you see that the orders are still there. Like the fact that there's the wait list is still there. So they're like, with the conversation of what we heard about demand crush does not exist as it stands right now. Now, can it exist possibly later on in the future? Who knows? I mean, when you reach the law of large numbers, yes. When it talks about that tax credit, I think the only thing that's really hindering is the fact that, you know, if you get the car in January, when you receive vehicle delivery in January, then that's when you can apply the $7,500 tax credit. The only difference is that they just don't immediately apply it, whereas people at Ford, they can immediately apply it to your purchase of the vehicle and many of the other auto manufacturers. But then when I look at like autonomous driving and autonomous vehicles, I mean, you have to look at the amount of cash pile that sits on the sideline until they turn the lights on. Like, that's huge. Like, you know, and what other company can literally just turn on, over 50 billion, over $75 billion worth of cash that's just sitting there on the sideline, just waiting to just literally be infused into the company? And what does Tesla look like now once they have that much amount of cash? Like, how many other auto manufacturers are literally able to store up the amount of cash reserve in the time span like Tesla? Nobody. So, I mean, when I look at it in the landscape, yes, can Tesla go down? It could. I mean, it's sitting below it's currently like hovering around its S&P 500 induction price, which I think it was $231 a share when it got inducted into the S&P 500.
That's pre-split, right?
Now. Yeah, that's pre-split. Yeah. Or yeah, that's post-split.
No,
that's post-split numbers.
That
that's
was post-split. Yeah.
Yeah, that's post-split numbers. So, I mean, again, it's like, if we look at it, you know, in totality, yeah, we could see Tesla go down to 160, 180, or whatever you say it is. But then the thing is like, you know, you're missing one part. What happens after Elon hits all those benchmarks at the end of the year, and then essentially he's awarded all that stock, you know, at such a cheap price, and then that literally solidifies itself now that it's become a part of his portfolio. He gets it for, let's say, $4 a share, but then the stock is trading at, let's say, $200. The stock won't be $200 once he's awarded those shares.
What if he doesn't meet those benchmarks?
Look, man, when you are on $1 salary, you are going to make sure that company meets those benchmarks.
No. Mark and M2, you guys' disagreement or whole thesis is Mark, M2 thinks that demand's not going anywhere. Me and you think that demand's going to go down. That's kind of where, and we'll find out.
I think, and my biggest issue with it, I think this, especially like the Model 3 is really what established Tesla what it is, right? It was the affordable vehicle for the average middle class citizen. And I feel like they have raised the prices now to the point where it's kind of pushed us out. And I see that when the Kias and the Fords and the Hyundais and all the other cheaper ones come in, when it comes down to it, especially if we're in a recession and we're like, well, shit, gas is really expensive. I want to buy an EV vehicle. I'm looking at the Tesla. I really like the Tesla, but this Hyundai is like $10,000 cheaper. I might just go with that. Because that's literally how I feel when I want to buy a Tesla.
But what you're paying for is just the manufacturing as it pertains to for them to just be able to crank out multiple amounts of vehicles because of the fact that they're a larger manufacturer. But yet at the same token, that's the erroneous thinking of thinking about, okay, yeah, I'm paying $10,000 more today, but yet at the same token, the infrastructure is already supported. Whereas a lot of those vehicle makers, they don't have the infrastructure that surrounds it. Like, that's the main part when you think about it from a vehicle standpoint. When we look at the Model 3, yeah, the Model 3 is reaching its point where I think that the Model 3 price will significantly drop, you know, within the next, 2 years. The reason being is because of the fact that they are working on another vehicle, one that's going to be cheaper, that they confirmed that recently. And then two, the other part is we're missing some key pieces here. I noticed in your argument, you didn't mention anything about semi-truck, which those orders have now started, and they're going to start. The production has started. So now that those deliveries come through, there's that. And then on top of that, you didn't even mention anything about a Cybertruck, which that's now on track since the casting and production is ready. So it's like,
well, I said a year. That's why I said a year. I said a year because
these things are all happening within the year, though. That's what I'm saying. Semi-truck will be delivered before the year is out.
supposedly. I want to see it. There's a lot of stuff that Elon says.
You've already seen the car. You've already seen the semi truck driving on the road, though.
Yeah,
it's not being pushed down a hill.
I was about to say that. I was like, I also saw videos of Nikola. So no, but yeah, okay.
But I mean,
well,
is your thesis more so surrounded based upon the actual fundamentals of the company that drives it down, or is it the fact of given the current climate? Because if you're saying given the current
climate and the challenges.
So if we say the current climate, then yes, we can make an argument there as it pertains to driving down the stock. And if that's the case, then you would have to bring down Apple from 149 to the 129, 126 respectfully.
Which I also think.
Absolutely. So yeah.
I mean, it could possibly happen, but the only problem with that is that everybody's looking at iPhone 14 numbers, but then you're not looking at iPhone 14 Pro, which, I mean, look at the demand on that.
I agree with you. That was BS. We shouldn't have dropped on that.
So, and then on top of that, you just had your competitor. You just had one of your major competitors literally just give up and just say, okay, hey, we're giving up on this autonomous vehicle department within our company. So level 4, level 5 autonomy, we give up. We realize we can't do it. And then on top of that, you had Intel have to spin off Mobileye to create its own publicly traded company. Why? Because they needed to stop the bleeding and they needed cash. You spent so much money just to literally acquire this thing, and now it wasn't producing as much money. So now you send it to the publicly traded markets, kind of like a SPAC, but we're not going to talk about it. But again, here we are with Mobileye. So again, it's like I look at it in the sense of I don't see Tesla like, I mean, I'm getting ready to get that update. I think it's 2022-69. Don't get on me about the number. I didn't make it. But again, you know, FSD is moving according to like what it can do within the parameters. You know, it's like it can't be like the ultimate tech company where it's like, you know, tech companies, we just push forward and we just push something into the ethos. And then everybody literally just says, okay, hey, this is what we got. And then regulation has to catch up. That's not the case because of the fact that he came into an automobile space. So you do have to play within certain parameters. And I think that that's the part where we say, okay, hey, that pigeonholes Tesla because they're still considered as a car company, which for all intents and purposes, that's fine. But when you look at the tech, when you look at what's underneath the hood, and when you think about like, I mean, honestly, I don't see anything stopping Tesla outside of the economics and literally the current climate of the market. Outside of that, I don't see anything stopping Tesla from going back up to being a $350 stock.
Oh, you're 350? That was your ultimate goal?
No, that's not my ultimate goal.
Oh, okay. All right.
That's not. I think that probably you will probably see Tesla and a few of these other tech companies. You will probably see them later on in the Dow 30 within the next 5 to 8 years.
Okay. Yeah. So it sounds like for the most part, you and I agree long term. It's just the short term is where I'm really focused on because I plan on eventually buying stocks in it. My wife says she'll kill me if I don't. So. And then I have to have these conversations with you all the time.
Right, you know,
so I just wanted to go 165.
It's always a pleasure.
Go 165.
It's always a pleasure.
165. No, but Mark, hey, thank you so much. I'm
just gonna let you know I'm not selling to get you there. So
when it happens, I literally will call you, be like, "I told you so." So
that is totally fine. And I'll be like, "Yo, my guy, you right." And I'll even post it, be like, "Hey, yo, Sway had all the answers."
Right. He's like, "You ain't got all this." Yeah. No, you got anything else, Mo?
No, I'm good.
Hey, Mark, listen, we really, really appreciate it. We almost reached 2 hours, way beyond what we were expecting. Yeah. Our show is typically 30 minutes. We knew we were probably at least an hour. Well, we knew at least an hour with special guests, but it went way over. But no, dude, thank you so much. I think this was a great episode. Everyone, please subscribe if you haven't done so yet and share this. And Mark, maybe we can have you come back on again, man. This was great. We really
I'll come back on one condition if you guys come on our show.
We're down.
Yeah, we're down.
Okay. So yeah, for sure. So thank you guys so much.
And by the way, that is like the background. It's playing music. So notice like when the song goes off and then the song comes back on. That's actually a song playing in the background. That's causing the background to do that.
Oh, that's pretty dope.
Yeah.
I just have Ray Charles and Bob Marley.
It's all good.
Always got to show off, Mark. I appreciate it. No, I'm joking. All right, everyone, thank you so much for tuning in. Mark, stand by. Don't leave yet. Just don't drop out. Some of our guests completely just leave. We're going to talk after. So everyone, once again, thank you for tuning in. I appreciate it. We see you guys next week. Until then, peace out.